bring you this next panel of the leading experts led by Andrew Korn, which you've met before, Paul Stannard, all the way from UK. It's great to have you here, buddy. I really appreciate it. Chris Burke, a leading media award-winning videographer. I hope I said that correctly, Chris. They're going to have a great discussion with you. They're going to share their experiences with you, what you need to do in order to get you seen and be successful in your RegA offering. Andrew, the floor is yours.
Thank you. Thanks, Oscar. And hello again, everyone. So this panel is about investor acquisition. If that is a new expression or a new term to people, it's one that was only coined in the spring of this year. I will take some of the credit for that.
It's got a good ring to it. Nice one. Yeah.
And I'm hoping that you have co-opted completely, Chris. So
yeah, I mean, we share, right?
Exactly. So I am the CEO of a company called E5A Integrated Marketing. We are a systematic, data-driven investor acquisition firm. We actually started in asset management. I'm a former portfolio manager, as well as a former chief marketing officer and agency owner. And we work across asset management for hedge funds, ETF issuers, real estate, Reg D, and of course, Reg A Plus and Reg CF. And Reg A Plus has a lot of complexities, and as Oscar loves to say, it's a team sport. So with that are legal filings, compliance, the broker-dealers, accounting, but the single biggest issue, as a bunch of the lawyers love to say, the biggest expense facing an issuer is investor acquisition. So I'm joined by two fellow experts, Paul, who is across the pond in London, with World Digital Foundation, and Chris Burke of RedTail Media. We were going to have another panelist, Carl Dawson, who was called away with a personal emergency. He is with American Next, and we wish Carl the best and hope everything works out. So I want to give a quick introduction to some of the daunting tasks that we have in the investor acquisition world. So some of it is just the basics of the math. If you're doing a Reg A plus, one of the great things is that you can have a really low minimum amount for people to invest, so you can attract a lot of investors. It can democratize your raise by letting people of all incomes and wealth in. And that ends up being both the good news and the bad news. So let's do a little bit of math together. If you're raising $20 million and you've got not the lowest minimum, but you've got a minimum, let's say at $500, and everyone only invested the minimum, you would need, for all of the other math geeks out there, 40,000 investors. And if you double that minimum to 1,000, or if you were to get your median investment up to 1,000, that would still be 20,000 investors. So there are a bunch of people out there with invest buttons and to automate these processes, and they automate AML and all the other compliance stuff. That's great, but nothing actually happens until someone learns about the company, learns about the offering, is drawn to an offering page, and learns enough to get them to click that invest button. So what I'm going to do to get the conversation going is ask a lot of questions, and we will go back and forth, and each of us will give a little bit of opinion on these different topics. And I'm going to start with Paul. And Paul, if you can just state a little bit about yourself and your company when you get going. Chris, if you can as well, that would be great when you answer your first question, or add on to what Paul's answer is here. Paul, can you tell us a little bit about first what a marketing funnel is, and then how it works in investor acquisition?
Yeah, I mean, a marketing funnel, I mean, if you type in Google, I think there's over 3 million references to it on Google. So it's a pretty important thing to understand if you're trying to acquire any kind of business, whether it's investment or general business. And you know, I think one of the other people that spoke earlier at the end of the day, this is all about people marketing their business and positioning their business so that they get people leaning towards them. And my background was in media, so I did some things in media that changed how people consumed media. So developed the very first applications for news online, 15, 20 years ago. And subsequently, I've gone into the investment field around sort of technologies in nanotechnology, biotech, AI, and was fascinated with what's going on in America with the whole RegA Plus and the Jobs Act. So threw my hat in the ring. So in terms of the marketing funnel, what a lot of people don't realize is, they'll go at it with, well, we're going to get a review from this crowdfunding expert who's going to say great things about us, and we're going to do that, but they don't have an overall strategy that takes in all of the channels, because the marketing funnel basically is, to start with, you have to build awareness, then you have to basically get people forming opinions about you, and then they start to build up their preferences, and they go through the consideration stage, and then eventually they act. And if you are not communicating across all of the channels all of the time, then you can't, you might reach out to one channel that these days only represents 20% of the audience, and we all live in this over communicated world. So you've got to reach many channels, and then when people get that level of awareness in terms of what your business is all about and what your brand is all about and the mission, then they can then go and do their research on you and form those opinions and start to build up those preferences.
Great. Chris, do you want to talk about the funnel for a moment?
Well, Paul's pretty much covered it, so I think I'm going to just go grab a drink. No, that was really good. I appreciate that intro, Paul, and it's actually interesting because I got into this world, I guess indirectly from Paul's side of the pond. My initial foray into equity crowdfunding was working with a company called BrewDog, who are Scotsmen, obviously. Now they have operations in America and Australia, as well as, in addition to bars all around the world and dozens of different countries, I think. But yeah, we were working on equity crowdfunding campaigns with BrewDog. I looked it up. It was over 10 years ago when they were doing it in the UK. So, you guys over there, Paul, were maybe a little bit ahead of the curve. Yeah. And so, the Jobs Act hadn't happened yet. RegA wasn't a thing. And my background is in media production, kind of maybe tangentially similar to you, Paul. And my production company, we make shows for people like Discovery and Food Network and stuff like that. But we've also done client direct marketing content. So everything from commercials to short form documentaries, that kind of thing. Kind of trying to raise the level of corporate video, as has been happening over the last decade or so. And one of the things we got into was doing a lot of work in the craft beer space, and got introduced to BrewDog. And then those guys, reached out to us and asked us to create some videos for this thing they were doing called Equity for Punks. And the rest is history. And they've raised, I think, over $120 million, something, north of that, from tens of thousands of investors worldwide over multiple rounds they've done. But we were also involved with the first RegA that they did when they were raising funds for BrewDog USA, which is going gangbusters in Columbus, Ohio now. So that was kind of my entree into this world, creating high octane content for BrewDog. Obviously, if you know anything about them, it's a lot of pyrotechnics and helicopter stunts and stuff like that, which is all well and good, but it's not for everybody, and it doesn't need to be, right? I mean, I think, a sophisticated scientific, biotech company wouldn't want to do a helicopter stunt the way BrewDog did. It wouldn't be on brand, it wouldn't work. But what we try to do is bring that sense of storytelling that will catch people at the top of the funnel, and then also start re-engaging, helping with retargeting ads, everything like that, and keep them interested all the way through the investor acquisition journey, which ends with an invest click, hopefully, if they finish their filling out their form. And then, sometimes there's follow-up as well with abandoned carts and like that. But, so we really come at it from an engaging content standpoint, but that's only one part of it, of course.
Okay, so I'm going to just back up and just talk globally for a minute about essentially a marketing funnel is a structure that's built so that if you have different media outlets, advertising, and the different places you might advertise, or you're going to do emails, or PR is bringing people in, social media is bringing people in, what does that experience and journey look like? And that journey can be structured so that you can actually decide what people are going to see next and do next. And you can structure that behavior through a marketing funnel. Now, people are highly idiosyncratic and they like to do what they like to do, and they also like to do it at a different pace. So a good marketing funnel will be flexible enough to be able to handle that. It's very interesting. Paul is in London. I'm in New York. Chris, I believe, is just outside of LA. So, we're in geographic areas, and we may actually think about things slightly differently, just the way investors do. We may approach them at different speeds. And at least I have a killer dog in the background. So I'm going to ask another question.
You're trying to get top of mind awareness. That's
right.
People will remember the dog.
Standing out from the pack, exactly.
Yeah, she's not a brew dog though, but she is an attack dog. So she's a full 12-pounder. Sorry, I muted there because she was going at it again. So, talking about, there's the top of the funnel, which is all the different ways you can bring people in. Why don't we talk about the top of the funnel for a couple of minutes? And Chris, why don't you start this one?
Yeah, I mean, I think there are, as you say, a lot of different ways to do it. One of the big things that we do, that I know a lot of other firms do as well, is a lot of digital ads. And that is a great way to get initial impressions and then obviously retarget people as well. And when I say digital ads, I'm largely talking about the infamous or famous, however you want to look at it, duopoly of Facebook and Google. And their sort of ecosystems. And when I say Facebook, I also mean Instagram, obviously, and all the different platforms, largely mobile, but desktop is still a factor. And people are on there, and obviously with Google, there's a ton of exposure for branded search and display as well, and also YouTube, which I think everyone knows is a part of Google, but sometimes we don't really remember that. I kind of think of YouTube, at least from an advertising perspective, as an extension of Google. And so it's about getting initial touches with the sort of wide net like that. And then, figuring out, being intelligent about the audiences that you're looking for there, and then remarketing. And you mentioned email before. That's a great one. Interacting with PR as well, as you sort of, get people down that funnel. I think for me, my personal approach is definitely Google and Facebook as, kind of the starting bolo net, if you will. I'm not sure if
Paul, do you want to add on to that?
Yeah, I mean, obviously they're all the from a digital marketing perspective, the ones that everybody goes for. But some of the other ones, targeted display that I know you touched on there, Chris, but also native advertising marketing. I think there's an opportunity there as well to storytell, and on some of these, that you can really drill down in terms of the audiences at a much more granular level. And I think, but the thing is, none of these platforms are a silver bullet. People say, well, I'm just going to spend all my money on Google, or I'm going to spend all my money on Facebook. They've got to look outside the box, because, there are many other things going on, and all of those audiences will only engage you in a certain way or a certain manner.
I think that's a really good point. And when you talk about native advertising and getting more granular with audiences, you're referring to like written pieces, like essentially what we used to maybe call blogs, or I guess you could still call it blogs, but you're talking about written content, right?
Yeah, written, or I mean, it could be audio visual, but it's basically like sponsored content on a news website. So
You know what I like about that too is one thing that I think we're all being advertised to so much all the time. As I think Andy said at the beginning, there's just so much noise out there. And so sponsored content like that, a lot of times I think consumers or investors in this case are sophisticated. They know it's sponsored. They'll see, this is sponsored, but maybe that's okay. It's still valid information. And that's something that I think is really helpful with these offerings, is all of these companies that are issuers in these cases are doing something really interesting. They have, a piece of technology, an idea, a service that's really cool and is designed to move things forward for humanity in one way or the other. And so talking about that in a way that maybe isn't as salesy and is more of that native content can be, I think can be great because it gets you away from constantly having to sell, even though you're obviously trying to move people through the marketing funnel, the investor acquisition funnel, as I guess we could call it for our purposes. I think there's inherent value to a lot of that content. And I read that kind of stuff and I learn from it, whether or not I go and invest or buy that product,
Yeah. So
Sorry.
could be done also with what we like to say is tell me something I don't know. So if the issuer has a product or service and let's say it happens to be real estate and they're building in primarily Texas and Florida. Well, here you have two states with no state income tax. You've got migration into the states, places where I am like right now, New York. People are leaving the state over the last couple of years, and California too. There's big migration in and out all the time. So if those statistics can be presented in a very interesting way where it's like, oh, I didn't know that, that makes it so, gee, there are going to be more people need a place to live, bam, okay, this makes a very solid investment. So that kind of content marketing and almost teaching, we refer to it as trying to get to that aha moment of, oh, I get this makes sense, and yes, I'm going to want to invest in that. So the question along the journey is, how many touch points does it take to get there? How many times do they need to see an ad, get to an offering page, et cetera, and what does that take until they say, yes, I've got this and I want to do it? So most people doing, or most, at least the clients that we've encountered in RegA, are brand new and no one's ever heard them before. So there's no brand awareness. And if they have a unique product or service, no one really understands that either. So that is kind of daunting to start with. Paul, what's like the first thing you do to get that going?
Yeah, we'll break it down, find out what resonates with who you're trying to communicate, and back to what you were saying about tell, sell. You've got to earn to learn. So when people are actually listening or watching or reading those messages, it's really important that they actually really resonate with what you're saying, because there's loads of research out there now that we don't like being sold to. I don't think we ever like being sold to, but the reality of it is we have so much at our fingertips that we want to self-learn. We want to go on and do our own research. We want to go and find out what that business's reputation it's like, what its mission is. So if you don't get into their minds and resonate with them from the get-go, then you're never going to get along that 7 points of separation until the word is yes. I mean, one of the best analogies I ever saw of this was back in the 70s. Coca-Cola were trying to look for a new message in the 1970s, and they commissioned somebody to do a focus group. So instead of the company deciding what we need to tell, sell, which is what a lot of these start, they've got such a story to tell, they just want to splurge it out. And actually that's not going to work. You're just going to switch everybody off. So what Coca-Cola did, they asked people to go and do a focus group before focus groups were a thing, and actually went and asked people around America what they thought about root beer and about the different root beers, and then asked them some questions about how they felt about America, and it was in the 70s, so it was Woodstock area, peace, love, and all the rest of it. And they came up with, took all these key words and wrote a song called "If I Could Teach the World to Sing in Perfect Harmony," and put a load of people around a canyon, and it was the most successful campaign that Coca-Cola ran for the previous 20 years. And then they brought it back 20 years later after the Iraq War, the first one, and it was a success again because it resonated with who it was trying to talk to. So having a mission message, people get carried away with the channels of communication. I think, you should be using 6, 7 different channels, and you should be using old media, new media, because they all have a place. But if you don't get the messaging right, then basically you're just going to fall in the trap, and you are going to irritate your audience beyond belief.
Great. So, I had wanted to get into kind of how you kind of coalesce this message and maybe how you might onboard a client or something like that. How do you get to the crux of this? Chris, if you could address that, please.
Yeah, well, I think, my career started in producing on-air promos, actually. So I had to learn that pretty quickly. So we would be, handed either a subject or a plate of footage, and we had to make something out of that and make people understand why Roger Federer was a player to watch on the ATP Tour in 2003. Well, we see where that ended up. You have to basically say, okay, what are we trying to communicate? How do we do it in a short time? And, in on-air promos, that's 30 or 60 seconds or whatever. And nowadays with this, it's even shorter. So, if you are squeezing the amount of time and impressions as somebody's scrolling first past on desktop and now like 90% on mobile as people are being exposed to stuff, you got to be really smart about what you're trying to say. And that can be the hardest thing sometimes, because a lot of these company ideas or any company idea can be a little bit complex, to really get to the meat of what it's about, but you have to figure out how to boil it down. So in terms of onboarding, I mean, for us, it's a lot of conversations at the beginning with the founders and the stakeholders, board members, maybe early investors, people who really have a lot of understanding about the company. And it's sort of like, taking all that and then squeezing it in a way that where you keep the essence of what it's all about and bringing it together from the different threads, but also make it digestible for the common person, and that can be easier or harder depending on the subject matter, but I think it's really important to do. And one thing that we try really hard to do is to keep that essence of passion about the product or service that the founders have, because you don't want, just for clarifying something, you don't want to lose that, because I think that is what makes these special, is that so many people are out there, entrepreneurs who've come up with this idea and they really want to see it through. They've got a ton of commitment to that. And I think that really resonates with potential investors when they can see how deeply committed and passionate the founders are.
Cool. So I'm going to actually answer this question myself as well, since Carl isn't here. I got my start actually very young, and I was asked to write initial public offering roadshows, which I've worked on literally hundreds of, everything from biotech to steel. So, as kind of Chris said, it's really hard to do if it's something completely ethereal, something that you can't see or touch, versus something that you can, or it's a consumer product and people just understand it. So over the years, what we have developed and have borrowed also is an onboarding process that basically looks at what a company has done previously, and even if that's nothing, that's okay. And then we put together a workshop, and we basically go through a series of exercises until we get a lot of stuff out of the client on, really what the essence is, and not only the factual matter, but also aspirational things, so that we can understand vision and where they're going. And then from that, we put together a messaging platform, get that signed off on, and then give that to the creative team. So, each firm has its own approach, and that I think is a very good thing. And I just wanted to comment also on focus groups. I have conducted tons of them when I was younger, and now won't get near one. And the reason is that we can come up with 3 great ideas. 5 of us, 10 of us can decide, 5 or 10 if the client decide, but I'd rather let 1 million ad impressions, which actually is not very many, let prospective investors teach us what is working and what is not working. And that can lead to optimization. So optimization to me then also leads to segmentation. And one of the things we'll see is, oh, this client has 100,000 people on their email list because they've been in pre or beta, or they're live, or they've got 100,000 people have liked their Facebook page, or they're following them on Twitter. So starting with Paul, do you treat them differently than you do investors who have never heard of the company before?
Sorry, could you just repeat that last?
Sure. So, some companies, and you hear this a lot in crowdfunding, hey, if you have a big social media following, that can be a really good thing. So do you treat them differently from a communication standpoint, followers on social media or people who are an in-house mailing list, than you do investors who have never heard of the company before? And if so, how?
Well, my view of that, or our team's view of that, would be once you've segmented and understood what the audiences are, you still need to have one message. You know, it may be you're testing different things. You know, the new focus group is, as you say, 1 million page impressions will tell you a lot very quickly, and different landing pages and all of that good stuff. But ultimately, you know, you need to stand for something. As Jack Welch said, you know, you've got to goddamn stand for something, and have a mission that people can understand and can take hold of. There's a piece of research out recently that basically the average attention span of a human being now is 8 seconds. You know,
that's longer than I would have thought. Yeah.
That must be women as well. Men have to be shorter.
The research actually said a goldfish has more of an attention span than a human being, which I don't know. It just made good PR that anyway. But the reality of it is, you know, different audiences do need to be treated slightly differently. But you shouldn't change what your mission and your message is, because you just might treat it slightly differently.
Yeah, I would agree with that. I mean, you do have to have that consistent message. That's really important. But it's almost like if you have an interest group that already is familiar with your brand, you can shortcut a little bit. You don't have to do the initial brand intro like, hey, this is who we are. It's more of like, you already know who we are, now we're doing this. You know, that's a bit of a ham-fisted version of it, but you get the idea. You don't have to, you know, you can almost skip the awareness part of the funnel with some of these folks, and you can get to hopefully invest faster. Although it's a double-edged sword too, because you may have people with a brand affinity who don't wind up converting really well to investors. So I think you need to, you know, back to the point at the beginning that both Paul and Andy have made, that you can't rely on any one leg. It's not even, you know, 3 legs like a tripod. It's more, whether it's Google, Facebook, it's email, it's all these different touch points. Relying on one thing too much, including an existing social media list or affinity group, is going to be dangerous. But I've definitely seen it work really well, and I think it just, for me, it's just a nice way to sort of like skip a little bit of the beginning part of exposure to the brand.
The other thing that I would recommend people do is, if they're starting from a very low base, you know, which a lot of these companies are, that are going, you know, because they're building their brand through this exercise, is to actually spend some time in terms of building your findability and building your reputation, and actually concentrating on those things first before you go with your go-to-market strategy. Because if people can't find anything about you, and they can't hear good and bad things being written about you on social media or all the rest of it, how are they ever going to start to feel affinity with you when you actually have your go-to-market message?
So I'm going to address that also from a segment standpoint, segmentation standpoint, but I want to get back to that whole affinity thing in a moment. So we had a client, they had a 200,000 person mailing list, and we looked at the list and basically said, okay, we're going to take the offering page and we're going to duplicate it because I don't believe any of these people will turn into investors. Thankfully, I was wrong and several of them did, but it was a tiny, tiny percentage. Part of it is because of what they do for a living, where their natural affinity group wouldn't really be investors. And, you know, a lot of times we're asking people to not only invest, but invest in an idea, a concept, a product that isn't completely proven. And even if it is, it may not be something where that group of people are normally investors. Plus, you're asking them frequently to put money into an illiquid investment. It's a private company.
That's a
So
tough one,
my
yeah.
firm does a lot of stuff with ETFs, you know, and it'll be, oh yeah, we have that product. We're taking in between $500,000 and $2 million a day on some of those products. But keep in mind, it doesn't translate to Reg A Plus like that because they can't trade out of it 10 seconds later if they feel like it. It's a total commitment. So, you know, also when it comes to segmentation, we'll look at something as simple as real estate and say, gee, the primary reason is that people are investing is current income. Well, we might create actually 3 different landing pages for that. One aimed at people who are 40 and younger, one for people in their 50s who are solely de-risking out of equities, and then people who really want income in their 60s and 70s. So the message, that platform is the same, but the driving force or their dominant buying or investing motive may be slightly different, and understanding those nuances can be really effective. Now, how much more work is it to do 3 different pages? Well, how big is the offering? And is it worth it? And can we be more efficient in buying media like that? So all of those things go along with that. And we had talked about, oh, you know, this is a team sport, and we were gotten a little bit into lists and social media and followers. You know, Chris, how do you see marketing firms working into the larger team in a Reg A Plus raise with the lawyers, PR, social media? Does your firm do PR or social media?
We do social media. We do not do PR. So, you know, happy to work with established PR firms who really specialize in this space and understand it. But we really love it when there is a PR firm involved on an offering. And, you know, if there isn't one, we'll often recommend it. Hey, you know, you should really do PR, because that will help a lot with what we've kind of been talking about, that initial discovery, that awareness. And there's something about having other sources of info about a company than its own web pages that really helps, you know, it's kind of the, you know, the concept of social proof. And in a way, it's part of the larger thing that you want to accomplish with social media as well, because if somebody hears of something, or they say they see an ad, oftentimes what they're going to do, it's not a direct path to clicking through and investing. They'll see something on a Facebook mobile ad and then turn to their laptop and Google it, and then they'll click, and maybe they'll see a PR Newswire release, or maybe they'll get, depending on your SEO, one of your landing pages, or maybe a New York Times article if you're lucky, something like that. So the more of a broad spectrum you can have of coverage and awareness, the better. In terms of social media, we do organic social media, I guess, you know, to distinguish from paid, because a lot of the, you know, sometimes people don't realize, you know, mostly what people are going to see in terms of the way the algorithms work is whatever you're paying for on Facebook and Google and even LinkedIn and stuff like that, in terms of how it bubbles to the top. But it is important to have an organic social presence as well that looks nice, that's consistent, that's a good mix of, you know, photos and reposted articles and thought leadership pieces, maybe links to, you know, some of those native advertising pieces that Paul was talking about, or blogs. It is important to have that, because you don't want somebody to see one of your awesome ads that's really nice and well targeted, but then they click through to your page and there's nothing there. And it doesn't mean that you have to go and get hundreds of thousands of Facebook followers or whatever. But you do, I think it's really important to have a solid presence there. and have some telling and some selling, right? You don't want to just be sell, sell, sell all the time. You want to sort of give an example of what does your firm do, what is your product, what is your service, and why is it something that somebody might be interested in, not only as an investor, but as a potential consumer, in the case of goods or things that people could interact with,
Great. And Paul, I think this is a softball for you based on your background, but if you could talk about the team and adding in PR and social.
Yeah. I mean, I've worked across all the platforms, and we can act as a full service solution. But I also think in any kind of mix, you maybe want a lead partner who's your stand with you through the process. But sometimes it's good to have another speedboat comes in that has a different perspective on the digital marketing, or has a different perspective on the creative, and throw something in the mix that 4 people wouldn't come up with that 5 would. So I don't. We do stuff where we can do everything, but we're working on things quite often where I'm working with other partners and they do that bit, and providing everybody is open and there's no defensiveness, then it can be a beautiful thing. It's when people get all proprietary about it, then nobody wins. So yeah, no, I think collaboration is a byproduct of success. So yeah, I welcome it.
Cool.
Yeah, and I think one thing to note too is we
I think
talked
Chris
a lot about PR and those aspects, but the deal and broker dealers super important. You can't ever forget about that. The importance of compliance.
I've lost Chris.
Yeah, so I'm going to jump in here for a second. We're going to have another panel.
Am I back?
Yes, you are.
You're back.
We're going to have a panel later today on earned media. And I love that you have to hire and pay firms to get earned media. Firms like mine mostly focus on paid media. And we do not do any social media, yet we usually do the graphics for it. We also don't do PR. But we sometimes put our thumb on the scale. As a portfolio manager, I was a shameless self-promoter, so I know a lot of reporters and a lot of producers for TV and radio. So we'll occasionally tap people who I have met over the years and work with the PR firm doing that. I was also the chief marketing officer of TheStreet.com, so know a lot of reporters from there. So SEO is another thing that, quote, you pay people to do, even though it's, quote, part of earned media. Chris brought it up for a moment, but is SEO optimization, is that an important part of what you're doing?
See, is my internet?
Yeah, Chris,
working?
yes, it is. If you want to be first on this.
Yeah. Yeah, I think it is important. And it kind of is, it's, sort of there's a base level version of that you can do part and parcel with building landing pages, building the investment website for people. That you can then take it to another level. I mean, there's entire firms out there that only do SEO. And I think for stuff like this, typically, I'm not sure how necessary that is unless you're in a super competitive area, but we have found usually that within the scope of what we do on building the landing pages and combining it with paid media and blogs and things like that, we can get some pretty.
All right. Paul, do you want to jump in on that while Chris is frozen?
Yeah. I mean, I just think we do SEO as part of what we do, and it's just another thing. It's not a silver bullet like all the other things, but it is an integral part. So we recommend people, pick what their halo keywords are, so the things that they'd like to be found on, and we've seen real success on that, where within 3 or 4 months we've moved the dial, and they're getting a lot more interaction with their organic content. So I definitely would recommend an SEO strategy, especially as once you get invested, then you want to be top of Google for this, that, and the other, and you want to be in that market, don't you?
Great. Okay. And I would just say we look at SEO as a basic. Your SEO has to be excellent, but it doesn't necessarily have to be a big part of general outreach. But if someone Googles you, they better be able to find you. And if they can't, then that's a big problem because they see something, hear something, they Google you, they've got to be able to find you.
Yeah.
I think Chris is the one who mentioned something about placement agents working with broker dealers. Have you done a bunch of that? And if so, how do you support them?
All right. Hopefully third time's a charm here with actually being able to talk. Sorry about that.
It's okay. You sound fine.
We're at the whim of the internet here. So yeah, I mean, I think the point I was trying to make earlier before I got cut off was just that legal and compliance, you know, and in the case of broker dealer, you got to make sure that you're doing everything according to the rules. And sometimes, you know, those specialists are going to know things and catch things that as a marketing agency, you might not immediately think, well, why is that a problem? Why can't we say that? But you have to learn to think in forward-looking statements and all those kinds of things, and be okay with the fact that sometimes you're going to have an eye chart of disclaimer language on an ad, because that's just how it is sometimes, you know, depending on the context. So I think that's something where the importance of that compliance can't be overstated. I think everybody considering one of these offerings probably knows that, but I just like to say it anyway. Because it's all too easy to make a mistake if you're not careful, and you just want to make sure that anybody that you're working with understands that and is really making sure that there's a clear path of communication to run things past the right compliance points.
Great. Paul, do you have anything to add to that?
No, only to reiterate it really, because you know, if you are going down that sort of multi-channel route, which you should, then there's a lot of content that's going to be mixing between those different messages, and it's very easy to fall foul. So don't put yourself in that position. Make sure that everything is checked.
Yeah, well, so I'm going to address that quickly in two ways. One is compliance. Is, you know, my firm has to write compliant copy all day long, every day. It's what we do. We do it for the ETF world, the hedge fund world, the mutual fund world, and of course the Reg A Plus and CF world. So that to me is a given, and we have a lot of compliance jokes that run around our office. People always answer questions with perhaps, or we're aiming to. We never say definitely or absolutely or guaranteed of anything. So that ends up happening. But placement agents is a very interesting thing when you're working with a broker dealer, especially if you're doing a larger raise and they have an opportunity to pitch larger clients where their placement fee is literally worth it for them to invest the time to do that. And we end up doing quite a bit of the messaging for them. We also have the data on almost every institution in America, meaning their name, address, phone number, and email address, how much money they're managing, what they invest in, etc. But it's also the messaging and what that should look like and what that journey, which is a completely different journey than the retail journey looks like. So I have 3 more topics that I want to get through, and we have 11 minutes left. So the first one is platforms, because all of us, myself, I'm guilty as well, have been talking about essentially companies doing this themselves on their own website. Yet there's an entire industry out there. In CF, there are 53 platforms I'm aware of. In Reg A+,
probably more coming, yeah.
Yeah, and in A+, there's 5 or 6 big ones and a bunch of other ones, and then some really close specialty ones. So, Chris, do you like an issuer to be on a platform, be off a platform, do a hybrid? What's your view on that?
Yeah, I mean, I think, you know, my experience, I can kind of only speak to what I've seen and worked on. I've worked with people who have been in CF and then go to A, and so maybe they're on a platform and then they decide not to be in the future. I think, you know, I like building the offering pages. I like having more control, you know, on the issuer's behalf personally. That's not to say that platforms aren't good or can't work for some people, but I think in Reg A in particular, because it is such a long haul and so much goes into it, I feel like it's really important to get as much understanding of all of the data and all of the touch points as you can. And I find that easier to do when the issuer makes their own site. That's kind of where I stand.
Paul, do you have experience and opinion on that?
I've had, yes, direct experience, and I would totally agree with Chris. I think, you know, the platforms, you know, there's a garden wall, and sometimes you can't get over it. And it's your company, it's your business, it's your future, it's your data. Why would you hand all of that over to someone else's control? It doesn't make any sense to me after 30 years of advising people in marketing and communications.
So we've had a light touch on that with Chris, who prefers it on the issuer site. Paul takes it to another level, and then I'll throw a jackhammer in on this. We actually will probably not ever work with an issuer who's on a platform for a Reg A+. There are a bunch of platforms. Some of it is spiritual, some of it is practical, a lot of it is data. You know, basically, if a platform, you're going to pay someone like one of us to then drive an enormous amount of very qualified traffic there. And once they register, they are going to then be captive to that platform and remarketed. The other thing is when they get there, there's a menu of options for them to look at. But my biggest reason for not wanting to work with them is simply data. Some of them will not allow us to put ad and tracking to the journey, in which case we lose control. If we don't have control, we can't be responsible. So if you don't raise money, who are you going to point to? So we want to know that if we can place ad tags everywhere, that we can make sure that all the messaging is correct. So I'm going to get to my last question, which is a two-part question, is how long should a Reg A+ take and how much should it cost? And let's start with you, Paul. What should an issuer prepare for time and budget-wise?
Well, I'll just use a couple of analogies. Salesforce, which was a big brand that came to the market, you know, X years ago. And for the first, I think, 5 to 10 years, they spent 50% of their turnover building their brand and marketing. If you go to a gunfight with a feather duster, not a gun, you aren't going to win the battle. So you've got to put enough fuel in that engine to get that plane off the ground. And then you've got to keep it there. And you've got to use all the channels of communications until you deliver the message. So you probably, across the whole journey, you know, a minimum of 10 or 15% of what you want to raise. And probably in that first 3 or 4 months, you're going to be putting in big amounts of fuel and expertise and strategy and planning. And if you don't go at it right, then, you know, you're going to be turning into the thing what I call spraying and praying. So then they're relying on, oh, some crowdfunding website is going to say something good at me and I'm going to get a bounce on my investment. You can't, that isn't a strategy. You know, hope isn't a strategy. You've got to have a 3 to 12 month strategy and 3 months of planning and positioning, and then you then got to put the fuel in, test it, and then go big or go home.
How long, how much?
If you're raising, well, it depends what you're raising, but if you're raising, say, $20 million, you know, you've got to be prepared to spend 2 or 3 million to acquire that, because you're building in your future. You're gonna own that data. You're gonna build that community. You're gonna have those relationships.
And how long should it take, beginning to end, on that 20 million raise?
I think 12 months on average. If you do the planning part of it right at the beginning, you can go at it more aggressively if you get off to a flying start. But you're still going to have to. The more fuel you put in, the higher you fly, the more you take. If you keep taking fuel, putting it in and out, you crash the plane. That's how it works.
Yeah, time passes a lot more quickly than you think it's going to. 12 months sounds like a lot of time, but you know, I mean, is there a way to do it shorter? Yeah, but if you can go 12, go 12. you know, go that full year, and don't be surprised if you spend 20% of your raise. That would be what I would say.
Okay, so I'm going to offer a very different view. You know, our entire perspective is basically building first-party data, meaning data that is yours and yours alone. It's not acquired from Google or Facebook. That may be tools you use to help get there, and that can take a month or two. And once you have that, predictive analytics tells you basically how long it's going to take and how much it's going to cost to get there. So on a $20 million raise, we say from 4 to 7%, and would not exceed 7. And the reason for that is the way the data is built. You know, the old expression, half my ads are going to the wrong people, I just don't know which half. That went away a long time ago. And if you're doing truly data-centric, data-driven marketing, you should be able to narrow that down reasonably quickly. And actually, I'm very confident that both Paul's firm and Chris's firm use similar techniques. They may not be as chronic, compulsive about it as my team is, you know, because I left the industry and spent that time as a portfolio manager. The data has gotten very serious with us. But the creative team rules as well. So anyway,
Yeah, both really are super important to work together. I agree. I think,
yeah, it's a yin yang.
Yeah, yeah.
Yeah, I mean, I totally agree with that. The only thing I would add is, when you're going to do a RegA Plus, you know, I've helped other companies IPO in the UK. I've worked with companies that have done it in the States. You know, I had a conversation with Steve Wozniak 4 years ago when we brought him over to the UK, and I said, "Was you ever in a garage? Did you ever start from some?" And he said, "No, we started with marketing dollars, and we built a brand that people could identify with. And it's not just about raising capital. People think it's just about raising capital. You're building your whole business's future and positioning your brand while you're raising and acquiring capital."
Right.
That's a great point.
Yeah, and I want to throw a little cold water on some of the confidence that I just showed, because we were in market in January and February, and then people may or may not know this, but a global pandemic came, and basically that changed everything. And I can tell you, in the financial products that we market beyond RegA, we changed every single one of our ads and every single one of our landing pages because the messaging needed to adapt. And what works in the fall may not work in the winter, which may not work in the spring. So even if you're going after the same exact audience, so there are a lot of considerations with both time and with budget. But what I do want to say on budget is the number one reason most small businesses fail is that they're underfunded. And I can tell you the number one reason that most RegA Plus raises don't raise all the money is because they're underfunded. So that is a super important piece.
Well, not only a super important piece, but an opportunity, which was asked before. Are there companies that are going to come in that middle piece? Because if there is a good opportunity, like you said, needs a budget to do it properly, to Paul and Chris's point, but you're undercapitalized, and this is the way to go. So I think there's going to be new entrants coming in to assist companies in that route. And I love your message all the way across. All of you have different tactical elements to the approach, but they're all needed. I mean, I see it from the other side, where when a company's completed, I talk to the CEO. So how was your journey? Well, I love my video. I love this. So they end up utilizing everyone. So as I've said before, continue for any of the attendees that are here joining on, is that this is a team sport, and you need to work with the investor acquisition partners that are there, that actually understand what's needed. And for the CEOs, you go, okay, you cringe, you go 20%. Well, think about it. If you go to your current business plan right now, you already assigned dollars for marketing. And Paul said it best. This is not just about raising, it's establishing your brand. You're reaching to an audience that is going to resonate both with your brand and investing. So you're getting 2 for 1. That's the best deal you're ever going to get.
And to, you know, to tack on with Andy's point too about the importance of having your own data, that data is going to serve you into the future well beyond your RegA, you know, in the future as you're providing your products and services, you know, that doesn't diminish in value, assuming that you keep building on that, you know.
It becomes actually a corporate asset. It's not just something that's used to help with the fundraise, with the capital raise.
They can be your advocates as well forever, can't they? Creating
right.
a loyalty loop that's perpetual.
Yeah, I mean, let's just to circle back to BrewDog for 1 second. I know we got to wrap up here, but you know, those guys, their army of you know, tens of thousands of investors worldwide. Those people are not just investing once and then forgetting about it. They're also going out and buying the beer. They're telling their friends about it. It becomes, you know, an ongoing sort of snowball effect of talking more about your brand. And there's a version of that for everyone, you know.
And they call themselves the equity punks. I mean,
That's
I mean, that is a, you know, at CoreConnect, we're playing with our idea to call them gladiators. So, I mean, you're going out there, exactly.
Everyone gets supplied with a short sword and a shield, and then
a shield, and we're moving and democratizing capital worldwide. That's the movement, right? That was the down of the establishment, if you think about it, right? So equity punks created a theme for themselves, and, you know, Andrew, Chris, Paul, that was phenomenal. You know, for anyone who wanted to understand what is different between this and marketing, and you're talking to 3 companies, 3 executives who are leading that path, who have clients today. You're never going to go wrong with working with all 3 of them. Likely is that you will. And Andrew, you did a great job. Thank you so much today. And looking forward to the next panel with you guys. Thank you.
Strength and honor there.
Thank you.